South Africa will be hosting COP17 at the end of the year in Durban, and this, of course, is a key event that looks at coordinated efforts from countries around the world to reduce carbon emissions and move towards a more sustainable growth path. Joining me now in studio to discuss some of the issues surrounding COP17 is Vanessa Otto-Mentz, Head of Strategy at Santam, and Andrew Gilder, a carbon lawyer at IMBEWU. Very good morning to you both.
Morning.
Andrew, let's start with you. When we talk about COP, of course, one of the most pressing issues at this stage is whether we'll have a second commitment period for Kyoto, with the first commitment period expiring at the end of 2012. Let's get straight into it. Japan has come out and said forthright that it won't commit to a legally binding agreement post-2012. It is still the world's third largest economy, of course, decreasing significance as we see the rising powers like China and India come to the fore. But what type of signal does this send to the market?
Well, it's not a very useful signal to send to the market. Perhaps one should understand that the issue of the second Kyoto commitment period, while it is a pivotal issue in the negotiations, is not the only thing that is being spoken about. At the moment, it looks likely that there won't be a second period similar to the way the first one was structured, but the negotiations amaze me for their ability to come up with creative solutions to issues. So already we are seeing being put out there other suggestions of how to deal with the period in the post-2012 time period. And so it will remain to be seen what solution the COP actually comes up with in that regard.
And of course, Vanessa, the world has changed since 1997 when Kyoto was first ratified. And of course, the developing countries like India and China have proportionately a higher share of global carbon emissions than they had back then. So what is the importance of getting the buy-in from the likes of China and India? Norway's chief climate negotiator coming out yesterday saying that their participation is key, but saying that we also need to be looking at a middle ground solution.
I think it's important to understand that countries have different priorities, and economic growth and the whole debate around who had the opportunity to grow on the back of carbon in years gone by and who should have that opportunity now is a difficult one. I mean, the BRICS countries have large parts of their population that still need to be developed, and the cheapest way in the present is to do it by carbon, and that's the big dilemma that we have. And I must support my panel member on we need creative solutions.
Okay.
But then, of course, we can't wait on government, and I think that's the big thing that's important for business and individuals, is to say that we need to look at the risk and we need to start managing it. So it's not just about carbon mitigation, it's also about adapting to these changes that you're talking about.
Let's talk about the creative solutions that we might see coming out of COP. What are your thoughts in the type of agreements that we could see countries agreeing to?
Bear in mind that the negotiations deal, as I said, with a range of issues. So the one thing we are likely to see an agreement on is something called the Green Climate Fund.
And that, of course, Trevor Manuel is co-chairing.
He's involved with that, yes, absolutely. I think he's thinking of trying to squeeze $2 billion a year out of the international community for South Africa. That is already being pitched as a possible big win. So really it's kind of good consultancy, under promise and over deliver, which is a different situation from where we were prior to the Copenhagen meeting, where there was so much seemed to be riding on that meeting, unrealistically so. And so I think there's a much more realistic understanding of what might be possible. So we're likely to see the Green Climate Fund. We're likely to see a couple of agreements on technology transfer and so forth. It certainly is not going to be a silver bullet COP. We're not going to see the agreement that will finally deal with climate change, but then I don't think that thing exists. There are a number of solutions that need to be brought to bear over time, and the multilateral process is just, if you like, the central part of those.
Then let's talk about the role that business plays, because of course you represent the insurance industry and you talk about managing risk and managing climate risk. What are insurance companies doing in order to adapt to the climate change and the increasing role that claims or rising claims will take, and toll that they'll take on the bottom line of the insurance companies?
Well, I can talk about three things. I can talk about what we are doing as a company at Santam. 3-4 years ago, we realized that these issues are real. I mean, we insure flood risk, fire risk, storm risk. All of those things are affected by changing weather patterns and also affected by how we use the land. So we've done a recent study in the Knysna area, the Eden district. And what is clear there is there's two aspects to this. The aspect of climate change, which the mitigation and the COP17 and that process needs to address, but also very immediately how we manage on the ground where we live. So give you a practical example, 4-dune management. If we remove the 4 dunes, we increase our risk. That's very important to insurers to know that. And as we speak locally, today and tomorrow, the SAHIA and the FIA is hosting a event for the Strategic Risk Forum of the industry, which we're very excited about. And they're looking at environmental, social and governance risk, because it's that nexus together that will help us manage risk.
Are they putting significant focus on this and increasingly taking these issues into the boardroom?
Yes, I can speak for Santam, we are. I can also speak for ClimateWise, which is a global organization of insurers. We commit publicly, we've had 3 public audits done. So there's a lot of lobbying that's going on around insurers saying we need a good risk management environment. Society, government and business. There's also a lot of adaptation going on inside insurance companies in looking at models. Because if you look at pricing and products that insurers bring to bear, it's based on modeling of risk. So if we only look at the past, we know that the patterns are changing. So we have to change the kind of solutions we bring to bear and how we model and price. And it's in our shared interest to have insurance available and affordable, because we believe that we can play a significant role in socioeconomic development.
Andrew, green, the words green, sustainable development, tree hugger, you know, those have become kind of words that have been bandied about, and perhaps their meaning has been lost. But ultimately, what Kyoto Protocol is all about is the fact that climate change and the effects of it had become increasingly evident. Taking it back to South Africa here, you work with a lot of corporates. Are they realizing the risk to their businesses of climate change in South Africa?
The corporates that we speak to, if you go in and speak to them about saving the polar bears, their eyes roll back in their head and they're not really interested in speaking to you. If one goes in, just as my colleague has said, and speak about business risk, and track it back to the bottom line. There's a particular corporate group in South Africa that in fact has gone through a 4-stage process, which began with speaking to the board and achieving buy-in from the board for dealing with climate change within the business, but linked back to the fact that if they didn't do this, there was going to be significant financial implication for the company. And when one speaks in that manner, then yes, there is an understanding.
It all boils down to economics ultimately, and you have to make decisions based on, you know, the bottom line. So if they start realizing in the future that their bottom line will be impacted, then it will, you know, encourage them to start making changes now. But ultimately, businesses are faced with many challenges on a day-to-day basis. We've got miners that are faced with striking workers, you know, increasingly vigilant trade unions. We've got rising power costs. So there are a number of factors that they have to deal with, and of course, perhaps climate change and those issues move down the priority list.
It depends on how you look at it. I think the key thing is to analyze the risk properly. You have to, every business, if you look at King 3 corporate governance, every business in this country is required to look at good risk management. You have to ask the question, what are the risks that we need to manage? And if you frame those risks appropriately, bring it back. As I said, for us, it's about flood risk. It's about storm risk. If you frame it as climate change, it feels like something big that the government should do. And I think that's the key, is to actually bring it back, be practical and say, what do I need to manage in my environment to improve the resilience and my capability to respond to events when they occur?
And of course, discussions around COP and the implications for South Africa will come increasingly to the fore as we move closer to November. We've got South Africa hosting 40 environmental ministers next week discussing ideas around a practical solution at COP17. We're going to have to leave the conversation here for today, but thank you very much for joining us on the desk.